Hey guys, SGT here. In these tumultuous times in the precious metals, who better to talk to than the founder of Miles Frankiln, David Schectman. David, thanks for joining us and welcome back.
Nice to be back. It's been too long. We should do this more often.
I really appreciate your time, and I think that all of the listeners will too, because we've seen another raid in the metals, and I don't even want to ask any leading questions. I just want to hear your take.
You know what? I think as much as I don't believe that you can use technical analysis to predict the movement of gold and silver, because they're very heavily manipulated markets. And in a free market, technical analysis works quite well, but in a manipulated market, it really doesn't do the job it's supposed to. Nonetheless, what we see happening and have for a number of years is the market is controlled by paper contracts on the COMEX. Eventually, the lower they push the prices, the greater the demand for the physicals, and then the prices come back up. But the people who work with contracts on the COMEX do use technical analysis. And one thing that I've learned the hard way over the years is whenever the price of gold or silver gets too much ahead of itself, and you can use the 200-day moving average for that metric, there will be a correction. It may not be immediate, and in the case of gold in particular, it's been hugely over the 200-day moving average ever since July, and or actually longer than that. Going back probably to earlier in the year. But we'd reached a point where the moving average was around 1,500 and the price of gold was 1,900. That will not be allowed to go on indefinitely. So you run into a danger zone when you buy if the price is too far above the 200-day moving average. It will bounce down and come close to or touch that number during a correction. Currently, the 200-day moving average on gold is about 1,530, a little bit under. So let's say that there's a 5 or 6% potential fall possibility yet with gold. I would say that's the maximum. On the other hand, I think 2,000 is very realistic on the upside. There's probably a 25% gain potential on the upside. I like the odds. And when it comes to silver, silver is just terrifically oversold. When I look at the chart, it's never been this oversold as far back as the chart goes, which is back to February.
Correct. And just to interject, we're even more oversold than we were in the 2008 smackdown where they took silver down to about $8, aren't we?
You know, I believe you if you say so. I don't have that in front of me, but the 200-day moving average on silver is $38, and we're sitting at around $30.
Right.
So anyone who's looking for a buying opportunity in precious metals, I would say with no reservations, right now, this is a license to steal. If you can get silver, buy it. And I say that knowing full well that other than maybe 100-ounce bars, most silver items, the maple leafs and mint boxes and silver eagles and junk silver is almost falling into that category too. All of our wholesalers are back ordered at least 3 weeks.
Yeah, and I wanted to talk a little bit about that. The silver shortages you guys are seeing, I think you're seeing delays in deliverables. That's what I've been hearing from Andy. You're also seeing premiums rise, aren't you?
Yeah, they go hand in hand. And when everything you have is sold and you don't even have enough new material coming in from the mints to cover it, then you raise your margins. It's probably more severe in silver than in gold. But the truth of the matter is, if you look at the spot price of silver and call it $30, there's no place you can go to buy silver for $30. That number is a myth. If you want to buy a real 1-ounce silver eagle, you'll probably pay $34, $35, $36, depending on who you buy it from, at least that much. And so what happens as the price gets knocked lower by the games they play on COMEX, and we can talk about why those games take place. The two things that go hand in hand with it are delays in receiving your metal, and you'll pay a higher price for it. Back in 2008, when silver was down in the 8 or 9 range, you'd still pay $20 plus to buy it. So the premiums can get very, very high the longer the price stays too cheap, and the greater the demand becomes, the bigger the premium. And by the way, for a period of about 5 days in a row, we were doing 4 times our usual business. We were doing over $2 to $2.5 million a day.
Right.
And a majority of it was in silver. And this is what happens. I mean, we're not in a vacuum. The entire industry works that way.
David, maybe you could tell us why these prices came down in your opinion, but also give us a little bit of your inside skinny and, based on your experience, for the folks that are really a little bit panicked over this kind of white knuckle takedown, because I've gotten quite a few personal messages from folks that are really worried about this, and I don't know that they understand the big picture, although we've really tried to educate them about the paper manipulation and about the long-term silver story. To anybody who can just take a deep breath, this is a great averaging down or buying opportunity. From your perspective, what would you tell those folks who are really panicked by this 30% drop in silver in such a short time?
I guess the thing I would say is, what were the reasons that prompted you to buy silver in the first place?
Right.
If you bought silver because of the debasement of our currency with our Federal Reserve policies, if you bought silver or gold and silver as a hedge against the ineptitude of our government, what's changed? If the reasons that you bought it haven't changed and only the prices come down, then just sit back and relax. It won't be long before the price comes right back to where it was. Sean, I've watched my portfolio, my net worth drop about 25% in the last 3 weeks. You have to look at the gold and silver markets with a big picture, long-term perspective. What happens on a day-to-day basis is nothing to get too excited over or too concerned over either. When you look at the fundamentals, the reasons that people buy gold or silver, typically it's either because they're afraid of inflation, they want to hedge, they look at the debasement of our currency. We're borrowing $2 trillion a year more than we take in taxes. We're printing the money into existence. This has been going on for a decade, as has the bull market. Or else people are afraid of deflation. They're afraid of a collapsing stock market. They're afraid of a collapse of the major banks, which is entirely possible. If you have no alternatives, if you can't get enough interest to cover inflation, and the stock market is a risky place to put your money, precious metals are about the only safe place to go. But that doesn't mean that they go up in a straight line. And typically, I would expect to see at least a couple of major corrections a year. Now, this may change after the CTFC holds their meeting in about a month. If they, as promised, institute position limits on the number of contracts that the big bullion banks can hold, then they won't be able to continuously naked short gold and silver on the COMEX and pull the price down. And frankly, I think what happened to cause this latest pullback, it was a combination of things. First of all, gold and silver really did get ahead of themselves. Typically, the summer is a very slow period, and I honestly can't remember ever seeing a summer where the metals rose so strongly, and they got too expensive. Now, when that happens and the prices get too far above the moving averages, the bullion banks sit back and wait for something to happen to turn the market south. And once it starts to move, they pull their bids, they start selling, and they push the prices down, and they hit all of the computer moving average points that force the hedge funds to sell. What really put the foot on the neck of gold and silver was the CME twice raising margins.
Right.
On silver and on gold, after they already had started to fall, which is very unusual. Typically, margins are only increased when prices are out of line and rising too fast, but not when they're falling.
Let me ask you, when you say that silver and gold prices got ahead of themselves, I just want to make the distinction, and I think you'd agree, that they got ahead of themselves in terms of the controlled paper price. Okay, so they did get ahead of their 200-day moving averages and all of that based on their paper price, but based on the all-time inflation-adjusted high of what silver should be, which is about $140 an ounce, and based on all of the outstanding paper manipulation, I've continued to be a buyer in the 40s. And I just want to make that distinction for folks, because I personally believe silver should be worth far more than $50 an ounce.
That may be true, but silver a year ago was $20 an ounce, and all of a sudden it was $50.
Sure.
And when you do that in a 6-month period of time, that's a vertical move. They just typically can't hold that. There has to be pullbacks and corrections. The only question really now is is this a correction or is it the end of the bull market? And I can't find anyone within our industry who has any longevity, experience, or credibility who looks at this as anything other than a simple correction.
Don't miss part 2. Click here.